turn the music off. It's actually quite nice. Okay. Swing on by YouTube, everyone. Good morning. It's Thursday. I'm pretty sure I clicked to turn the music off, but the music's still running, so bear with me. Oh, I don't know where it coming from. Just close that whole window. Yeah, that works. All right, so hey, welcome to YouTube. Welcome to the Forex.Today channel. Bye, YouTube, everyone. Good morning. It's Thursday. Wow. Yeah. Okay, I think we got everything. Let me get the chat. Let me get the chat so I can see you guys. All right. So, guten Morgen. Yeah. Today is, I think it's a Thursday. I believe it's a Thursday. I know Fed was yesterday, so it must have been a Wednesday. So yeah, Thursday, May 3rd. Wait, you guys still hear music? Hang on. Gee whiz. Life is so complicated. No, not that one, not that one, not that one, not that one. Maybe it's this one. No. Maybe that's what you guys hear. All right. Cool. So you should be on YouTube. You should be on the YouTube channel. Please visit over there. So let me remind you that trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But cheer up! To avoid all this risk, just stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Today, I would like you to participate by asking questions. Yeah, I actually want you to ask questions. You're the boss. I am a humble currency trader. I've been doing this about 14 years or something. So I've been around. I've seen a lot of things. And I'm here to earn your loyalty and respect. And how do you show your loyalty and respect? You fund a live account at tradersway.com. If you are not ready or you're not confident in your skills to trade real money yet, then hey, takes less than a minute, honestly, less than a minute to register for a demo account at tradersway.com. And if you do, you have the opportunity to check out our spreads. Unless you do an ECN account, then you'll see the fees for that. You'll check out our world-class customer service. Our execution speed is faster than most of the big boys. I've seen it. So, you know, we can start the relationship there. At least light the candle, pour the wine. So how did you do yesterday in regards to the Fed? Fed didn't make any changes, right? Didn't make any changes, but you know they typically raise interest rates in June and go for the summer, right? So not doing it today, or in May, that makes sense, right? So they're keeping their powder dry until June, and then they'll raise interest rates again, and then you know we'll take all of that out. Cool. ECB is in a different situation, right? So here we got the Fed. We're at full employment. The natural rate of full employment, which will change over time, but we're good on the job stuff. We're now good on the inflation stuff. We're right on that inflation target. So really what Powell said yesterday was, well, yeah, but that's not a big deal. All right, which maybe they're going to let it overshoot a little bit, which I would do if I were me. But nonetheless, here we are, full employment, you know, good inflation. We're not in a deflationary, we're not in a disinflationary area. We don't have high inflation, kind of in that sweet spot. Do I watch Billions, the series? Only on airplanes, actually. So I've seen maybe the first season or two, but I only watch them in first class. Who else? You have time to watch TV? I get maybe an hour a day if I'm lucky. So maybe I get about 4 hours a week, and it's usually in the middle of the night while everyone's sleeping, and I get to watch things like British reality shows on rebuilding your garden. Let me tell you, it's not great TV. But anyways, yeah, I'm not a big TV guy, but you got to do something while you're having your glass of wine, right? And of course, I read all the time. I write all the time. I mean, I'm a college student, right? So that's my that's my 1 hour of power. What is this TV you talking about? Actually, a real story, and I don't want to get onto me, but a kid came over to hang out with my son, and he looks around. He's like, "Where are your other TVs?" Because we have a media room near the front of the house, and he comes in. All right, that's where we play Minecraft. Great. And then he's like, "Where are your other TVs?" I'm like, "We don't have any other TVs." He's like, "What the? What do you mean? Where are your other TVs? What do I do here? Where I need constant stimulation." Like, all right. So I pushed him out the front door. But anyways, yeah. So we don't have a lot of that going on. All right. So anyway, so we have this. The Fed seems to be in this weird spot where you have the difference between Y and Y bar. If you're not an economist, what that means is your potential GDP and your actual GDP. Typically, there's a spread where you're not quite at potential GDP. You're not quite hitting what the economy should be hitting. So as a central banker, you do like a monetary policy to stimulate the economy so you can move closer to actual or from actual GDP to potential GDP, which should be higher, right? So you do things like maybe lower interest rates or increase the money supply or something like that. And you move the economy towards the potential. But what if you're over the actual potential? And that can happen. What if the economy is too hot, producing too much, prices are too high, all that kind of stuff, and you're above a healthy potential GDP level, and then the central bank would do something to, raise interest rates, raise the cost of borrowing, and this kind of cools off the economy, and you go from Y, your actual GDP, to Y bar, which is Y with a bar over it. That's your potential, and you cool the economy down. It's very rare that Y equals Y bar. And look, if you haven't taken an economics course, then don't worry about it. But it's just this idea where you have the economy should be doing what it should be doing if it's healthy, but it's very rare that you're at that exact number, right? Think about it as a line on a chart. Let's say it was a 45-degree angle, okay? Well, I wonder if I can draw it. I don't have my typical drawing tools, but why don't I do this? I can go template. Oh yeah, what was I doing? Okay. So let's say that's your long run economy. If you're on this as the economy is moving over time, and let's say growth and all that kind of stuff. If your economy is on this line, that you're healthy, right? Sometimes the economy gets overheated, and this is where your economy is, but it'd be healthier if it was here. Okay, so the Fed comes in and raises interest rates, raises the cost of borrowing, slows down the rate of growth, and then you get down here. You can see you have inflation, but less and less and less and less, and then you get to here, which is perfect. Now you're at your long run growth rate, but then the economy goes into recession, and now you're less than growth. So then the Fed comes in and lowers interest rates, buys bonds, and stuff like that. And over the course of, let's say, 100 years, right, the economy looks like this. So think of this as a chart. I don't have the best drawing tools here, so bear with me, right? So you have like, you can call that what, GDP? Okay. And another way of looking at that is Y. That's what I mean by Y. Okay, and then down here would be time. Okay, so you imagine like let's say after the 1930 recession, we were down here, and then World War II, and then the economy got over hot, so then we cooled it down, and and then inflation kicked in, and then 90s, and then the 2008 recovery and all this kind of stuff, right? So this is your potential long term. So when I say Y, I actually mean Y, GDP. Okay, but I mean Y bar, which differentiates long-term potential. So you do a Y like this, that the bar above is the bar, versus actual Y, and that's what this thing is. That's just Y. So there's a difference between long-run, healthy growth and right. So here's the thing. So you have where you want to be, Y, and where we are, or sorry, where you want to be, Y bar, where we are is Y. And so where the Fed is now, you know what, let's not do it that way. No. So where the J-Whiz. Can we get this right? Okay, so where the Fed is now looks like this. Okay, we've come out of a recession. The economy's been growing. Now, Y and Y bar equal. Haha. So, right? What happens now? What does the Fed do? Well, look over the last 100 years, there's been like 1, 2, 3, 4 times we've been at this situation, right? But you can see that it's likely to rise above, and that's probably they're okay with it for a while, and there may be 5 years where we don't have to worry about it too much, where inflation is there, but it's contained, and you want growth, right? Okay, but see, the ECB is still down here. Where, yeah, okay, maybe they're not at the brink of collapse, but data's been disappointing lately, right? It was really good. It was rallying up. And then what, the last couple of months have looked like this again. And they're not rising to Y bar, right? So this was really odd because for several months, well, actually, for even longer than that, right? I was quite aggressively buying euro. Okay, this is what we're getting to now, right? The convergence, or in this case, divergence of central banking policy. Okay, so the ECB was growing quickly. The Fed was pretty close to Y bar anyways, so growth would be more difficult, let's say, right? And so money was going to Europe because the United States, if you think about it, the stock market went from 8,000 to 25,000. So the stock market was expensive. Real estate prices went from a discount of 50%, pretty much all the way back to where they were. So now you have some money. What do you want to do? Do you want to buy real estate at full price, or do you want to buy the stock market at full price? That's where we were, let's say, 6 months ago, maybe a year ago. And I started talking in these webinars about that. Like, now you're a hedge fund manager or you're a private equity manager and you got $1 billion in cash. What do you want to do with it? Do you want to buy the stock market at full price? Do you want to buy real estate at full price? You're like, Wayne, I have a responsibility to my shareholders. I have a mandate. I don't buy anything at full price. I'm supposed to get deals. I'm supposed to buy low and then this sell high, right? So then we got to a whole different question where Europe, even though the United States had really been rallying up from Y to Y bar, Europe was still sort of in the trough. Remember when Europe was still kind of like that? Actually, let me draw this differently. Europe, so now if we're looking at European GDP versus, actual GDP versus their potential, Europe was kind of like this, and the United States was by and large fully recovered, right? Like if you're thinking a year ago. So I'm like, look, I know the numbers out of Europe a year ago suck. And the numbers out of the United States are great. And the Fed is raising interest rates. And the ECB is still doing quantitative easing. I get all that. So start buying the euro. And you're like, but wait, the Fed's raising interest rates. I was told in my economics class at university, right, that if the Fed's raising interest rates and the ECB is doing quantitative easing, that I should put all my money in the US dollar. Why are you telling me to buy the euro? I'm like, yeah, well, your textbook is wrong. And if you're a private equity manager, all you really care about is, hey, the worst in Europe is over. Everything in the United States is overpriced. So I'm going to go to Europe and I'm going to buy some Dutch companies and some German companies. I'm going to buy them cheap, and the euro is still cheap, so I'm going to get cheap prices. Plus, the exchange rate is going to favor me because I'm buying cheap euros to buy these companies. And all of a sudden, the Fed's raising interest rate, but the US dollar was weak. Remember that over the last year? So now we're in this weird situation where maybe all of that's over. Right? But I'll tell you, I'd much rather have a weak US dollar than a strong one. So I'm still really a bear on the US dollar. But I wanted to point out what we've seen from the central banks in the last 24, 48 hours is that the US is at full Y bar, and the ECB is actually starting to drift away from Y bar. There's a divergence. Okay? So sorry for going fundamental on you. I didn't plan on that, but somehow it seemed right. Hey, thanks for coming to today's webinar. I appreciate that. Would you give me a like? I don't know. And then we'll do more technicals. And thank you for subscribing. Again, if you subscribe and I do a random event like this, you're notified immediately. Okay. Oh, my pleasure. I don't know if you guys are thinking about these types of things, so I'll bring it up from time to time. Cool. All right. So yesterday, before the news, we were sitting on the weekly bottom and a monthly support. Okay. There was lots of dipsy-do, whoa, 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 and nothing happened. Was that Cliff? Cool. Thank you for the thumbs up, guys. Cool. So the big question is, you're sitting at a monthly support pivot and a pivot profit zone for bears. Do you sell? Cool. Yeah, it is Cliff, huh? Mr. Nightel! Cliff, have you been attending like at least 10 years of my webinars? I think so. It's amazing. Thanks, bro. Thanks, bro. Yeah, everyone says no. Yeah, of course not. I bet you somebody did, though. If you were going to sell, you'd have to sell high, right? Yeah. And same with James. Yeah. Cliff has been around. James Wood. Yeah, James been 10 years of these webinars. Yeah. To put that into perspective, I was like a beta tester for YouTube. Before you even heard of YouTube, I was uploading my Forex videos to YouTube. How funny. Amazing. So if you were going to sell, you're going to have to sell high, but you have to treat it range bound because, you know, you got to pivot up in here, and you have the 4 hour 21. I mean, 4 hour 21 was up here yesterday, but, you know, it is a moving kind of thing. And then you got this going on. So it's really kind of range bound, but you could be setting this up to be a bull. And it's probably, I mean, it's one of these things, like, it's a difficult place to be a bull. But if you were going to be a bull, it's believable. You get it? But boy, it's a little bit of a mess at the same time, right? A little bit of a mess. I think maybe you should just let it break out. There's other things going on here that I don't like. So we're at an S bottom for May, and I don't like S bottoms. Because that means I'm either, you know, it means I should be a bear. But then when I look at this, there isn't a proper bearish entry. So it means I don't believe the bears are confident. It also, I mean, it does say in that situation, it could fall one more further. So it's telling me we could fall to basically 119. That's another 100 pips down. So let's say here, let's do it this way. So it means currently we're a bit range bound going into non-farm payrolls, which I get. That makes sense to me. And that it may drop here, do one more round. And then I'm going to start thinking this way. Next week, the week after next week. Okay? Okay? But this puts me in a tough situation because I prefer to be a trend trader, and that's counter trend currently, right? But at least it tells me I have reason to be cautious over the next, 48 hours of trading, that even if it falls, there's a lot of reason to say to myself, it may not fall further. So even a bear should start to grow cautious. Okay? Even these plays off the 200 are telling me to be cautious on that time frame, right? Okay, so let's go back out. I think I deleted some of the support that we were doing earlier. So let me re-highlight that. Okay, I find this whole area really, if you want to do it that way, this whole area seems to be very supportive. So now I drop into a 15-minute chart, and yeah, like we're right on it, huh? So I think I would be a nervous bear or a cautious bull. Okay, that's kind of where I'm getting with this. And if there's still reason to sell, I'd be cautious. And if I'm a bull, I'm thinking I want to see, continued, maybe I want to see breakouts, basically, right? I want to see evidence that it has reversed. So I want to see a higher high, higher low, and buy that dip. Okay? Or I want to see it drop down to 119, and then higher high, higher low, higher high, higher low. And it may not happen today. Yeah, Highlander says bears taking profit. Well, weekly bears are supposed to. Monthly bears are not. And then monthly bears, here's the interesting thing, and I didn't articulate it quite right. When I look at this as a monthly bear, as a monthly swing, there's no actual entry, which means I was bearish from before and I'm still in it. Okay. I also am anticipating that we hit the May target early in May. This is all in the charts, guys. I don't have opinions. This is just in the charts. It's telling me I'm a bear. I'm out of position. It's still bearish. It's likely to continue to be bearish, but I'm going to hit my bearish target early. And let's say in the first 10 days, I'm likely to be taking profit on last month's swing. I see all of that here. And that tells me that we have a little further to go, 86 pips down, further to go. We're probably not going to get it today. So then I say to myself, what about non-farm payrolls tomorrow? Non-farm payrolls comes out and this thing drops and then pops. And we find ourselves next week buying dips and not selling rallies. That's a lot, right? So once again, if you're a bear, you have 100 pip potential to the downside, and then you should probably seriously reconsider staying a bear. Okay. Right now, if you sold at 25, you're happy. But if you're just getting in now, ugh. So like for example, what resistance will you be selling? 120? That's all you have? That's it? That's what you got? That's all you're bringing to the table? I'm going to sell 120. Well, we've been there before and it didn't work in the past, so now, why now, right? Eternal Soul says, it would not surprise me if non-farm payrolls creates a simple whipsaw. Well, here's what you have to do is take all this information and use it in a plan. What would you do with all of this analysis if non-farm payroll spikes you down to 119? I certainly wouldn't sell it, even though it just dropped. That might be tomorrow's counter trend trade. So at Forex.Today, I posted like, I think a 4-page overview when I wrote it on Microsoft Word and gave it to them. But I wrote like a 4-page overview on how to prepare for and trade non-farm payrolls, including 2 individual trading strategies. One is a high volatility event-driven strategy, and the other one is a counter trend. And then I gave tips and all that kind of stuff. It's all at FX Street. One of them is a counter trend trade. Maybe this is your counter trend trade. Have it spike to the downside, and you pick it up down here because you're already thinking about what you want to do next week. Well, that's wicked smart, right? Again, thank you for the like, guys. All right, so let's move on. .com. USD Swissy. Weekly target achieved. It opened early in the week. Unbuyable. This was actually a really nice sell. You're like, well, wait, it went up. Yeah, well, that's the bad part. But I would have sold that every day of the week, or any given Monday, I would have sold that. Very quickly failed, and then it's very quickly hit its target. I don't know if you want to counter trend off of that. As you can see here, sometimes it doesn't work. I don't like counter trend trading. I really don't. There's only a couple of situations where I'll do it. But I would have shorted here if I were me, and I would have lost money. Highlander says, so are you looking for good NFP numbers? I don't really care what the number is. Okay, I really don't. I know what the trend is. Why is that equal to Y bar? That's what's important, right? So people that get all freaked out about the NFP numbers, they don't understand, like, why would it matter? We're already at Y bar. We basically have a perfect economy right now, right? We have inflation, but not too much inflation. Anyone that wants a job can get a job. But slowly those wages are going to go up, and slowly interest rates are going to go up, right? That kind of stuff, right? So NFP numbers matter most when we're worried about there's not enough jobs in the economy. Are we going to recover and add jobs? But, right? And then the other is like, what if there's too much inflation and there's wage growth, too much wage growth? So maybe a year from now we'll be looking at non-farm payrolls, but we won't care about the headline number because it'll all be on trend. What we'll care about is wage growth, because what actually matters, it's not non-farm payrolls that matters. That's a measure of jobs through the establishment survey and through the household surveys, right? But what we care about isn't the jobs per se. If you don't have a job, you don't have any money, you don't have any money, you don't go out spending because your disposable income's low and all that kind of stuff, and inflation is low. If you do have a job and it's a good job and it's a competitive job and you could walk across the street and get paid more, maybe you do walk across the street and get paid more. But the thing is, now you're confident. You're confident in your wages, you're confident in your work, you're confident in your job, you're confident in your spending, your disposable income goes up, your propensity to consume goes up, and you start buying stuff, and the value of your home's going up. So now there's a wealth effect, and you're going to do this, and you're going to do that, and credit's easy, and blah, blah, blah. And so what we really care is about the central banking policy, not the headline non-farm payrolls number. So the headline non-farm payrolls number will come out about average, where Y is equal to Y bar. So we're more interested in what's the Fed's next move. And so tomorrow's headline NFP number, who cares? How about wage growth numbers? Yes, we care about that because that's going to lead to more income, and your marginal propensity to consume might be at 0.8. So if you make a little bit more money, then your consumption goes up. Consumption leads to orders and sales, and la 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 spirals up. Okay. So, so let's just let's get out of this dollar scan. Let's get to the fun money. So I'm going to cover gold. I'm going to cover oil. I'm going to cover some of the currencies I like to trade. Okay, you guys all right with that? If you trade gold or oil, let me know. Okay, so type it in, gold or oil, or gold and oil. If you care about these commodities, let me know. If you don't care, then I'll just skip them. Okay. This is what I highlighted on the other chart. This is the euro dollar, and I'm just pointing out that this seems to me on a daily chart, we're at the daily 200 EMA, and this seems like this should act as support. It is oversold. MACD is at the waterline. If I were me, I'd rather be a buyer than a seller. Even if it falls further, I don't even really care. It has nothing to do with me. I'm interested in specific prices. So if it falls further and we're down here, I don't really care. I don't want to buy it there. Maybe I pick it up at 19, maybe I don't. But the next one is like way down there at 16, right? But that's not for today. I hope you don't hear background noise. I don't know why the construction crew started so early. I'm supposed to hold off. Oh, maybe it's a new guy. He's getting yelled at. All right. So we got some gold and oil people. That's cool. CAD. Okay. This goes back to our conversation yesterday at Forex.Today. We were down here and I gave hopefully a compelling argument that you should not be a seller, you should be a buyer, even though it fell from here to here to here to here. And maybe it doesn't look good on a 4-hour, but let's do it on a 1 hour. Yeah, all right. So on an hourly basis, it was like down to down to down to down to down. And I was worried that if you're only trading a 15-minute chart or less, you're going to look at this and just only see down. We were here, and I'm like, look, this might be down, but you can't or shouldn't. Oh, you know what? Maybe we were here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Oh, yeah, you know what? We were here. Wow. All right, cool. We had it like, okay, I asked, we were at a 618, I think, so that wasn't in either. Maybe we were, I can't quite remember. I'm sorry. We were somewhere in here. The argument, however, that I presented was on a smaller time frame, it may look like we're trending, but we're not trending. So you don't use your move. You don't use Fibonacci. We had 2155 EMAs measuring the market. I said delete them. There's no market. There was a 200 EMA in here that represented trend. So I said there's no trend. So delete that. So we deleted that. And I said all there is price, and that you have support. So I identified it with this area. And I said you have resistance. I identified it with this area, right? And I said, so we're down here, you cannot sell, and your next opportunity is to buy it, rally it back up to resistance. And I said, if you're bullish, you're going to hope that it's going to come up and down, and then you can have a breakout. But I said, in this case, when the market's range bound, you don't hope. I mean, you're going to want to. If you're a bull, you're going to want to see it rise, drop, and break, right? I mean, that would be your great trade plan. But you should not anticipate it actually happening. It should be a surprise, even though you're thinking about it and you're hoping about it and you're maybe even praying to the Forex gods about it. You should not expect it to happen. You should 100% of the time anticipate resistance holding, and having it come all the way back to support, and support holding, and having it go all the way back to resistance, and resistance holding, and you go through this pattern, this sideways pattern, absolutely forever, and then you should be surprised when it breaks. So if it breaks to the upside, you're like, oh, good, it broke. It broke to the upside. That's exactly what I wanted, right? And then you trade the retracement, not the break. Where's my watch? Which watch? I don't really wear watches anymore. Here's my closest watch. You like watches? Can't even see that. It's Tiffany. I don't know. You know what? I wore my Panerai for a while, but they're so heavy. My Rolex band broke. So anyways, let it break, catch the retracement. Otherwise, sell at the top, buy at the bottom. Sell at the top, buy at the bottom. Now, this is basically a short-term scalping type scenario. So you should not use an hourly chart. Maybe a 15-minute if you're slow as molasses. Okay? But you should be able to find opportunities here. Okay? And if you don't like the sideways movement, here's what you do. You ready for this? You wait and you wait and you wait. And if it breaks, come on. If it breaks, gee whiz, I can't get this today. Everything's being a challenge. All right, let's do it this way. No, wrong one. Undo. Get rid of that. But now I need that. Will it work? Still didn't work. Hallelujah. All right. Your next plan would be have it break out to the bottom, retrace, and you sell that. Okay? That is the most conservative thing to do. And now you sit on this and you find yourself here. So it's funny, like this is basically a week, and a lot of people may have lost money in here. But the saddest part is you'll find that on the long run, nothing actually happened, right? What's about the 40K? Oh, on the Panerai? I just wanted a ceramic watch. I was just interested. I read something about it not vibrating. And I thought, well, that would make sense for complications. So, I don't know. They're too big, though. I don't dive. I don't think anyone dives with their Panerai, do they? I think they go to dive bars. Yeah, no, my Rolex isn't 40K. Nah. All right. Yeah. The nice thing about my Rolex is you wouldn't know that it's a Rolex. But if you saw me, if I was wearing it, the band broke. So, but anyways, if I was wearing it, you would never know. You just never know. Now the Panerai, people are like, holy crap! What is that? But the Rolex, then you wouldn't know it. And I prefer that. All right. So anyways, gold. So gold has been, for me, a mediocre trade since the top here. Okay. And let's see if you can get an idea of what I've been thinking all this time. Can you see? Up, 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 down. We have support here, and I've been hoping or wanting for this to go back up because that means dollar weakness, and I want dollar weakness. Okay. Yeah, you're right. Yeah, the thing is that I don't know. I don't like spending money. I like making money. So when you go to the Rolex store and you're like, yeah, I need a new band. My band broke. And they're like, is it platinum? No. Is it gold? No, it's just stainless steel. They're like, oh, stainless steel. Do you want the Jubilee band? No, I don't like the Jubilee band. I just want the simple stainless steel band. Like, okay, we have one of those. You know, it's $3,800. Like, what the hell's wrong with you? For a stainless steel band? What the hell's wrong with you? How could it be $3,800? It's stainless steel. Why isn't it like $9? Hell no, I'm not going to buy that. I'm not cheap. I'm just smart. I'm not that stupid. Can't pay that kind of money for a stainless steel band, or you must think I'm retarded. What's wrong with you? Stupid Rolex monkey head. So anyways, I don't know if that makes me cheap. I just think I'm smart. I don't know. So I'm so smart, my Rolex sits in my box for years. Anyways, so here's the thing. I showed you, I think we're at support. Yeah. I think we're at support-ish. This goes back, this gray area goes back months ago. I drew that. Okay. Yeah, we can do whatever you want. That's the thing. I'm like, no, I'll save my money and pay for Harvard. Some dude the other day, he's like, dude, your property is beautiful. You should put in an infinity pool. I'm like, yeah, I'm actually planning on it, but I'm not going to do it now. I'm going to do it some other time. And he's like, why not? This would be great. I'm like, well, I'm putting that money into Harvard. Some people have infinity pools. Other people have Harvard degrees. I guess I chose Harvard. So anyways, we're near the support. You see, but its support goes back months. So it's not going to be accurate to the pip kind of thing. It's like an area. Months ago, we knew gold should find support around here. Then on the smaller time frames, now we're folding in things like weekly pivots. Whoever was trading gold, many of them are also using weekly pivots. So they're in this move here, they're squeezing into the weekly pivots, which for a long-term sophisticated trader would be quite short-term, right? Oh, Muko says, I literally closed gold trade 10 minutes ago. Well, the thing is, so here's what I'm trying to get to. Bears that have been in this from the top. Okay? Should have gotten out down in here. That's what that is. So going into this week, I mean, you had a choice here because you know there's support. I mean, right? This is what this is. We knew there's support there, but on much bigger time frame. And then the shorter term guys see that this is their target. So they're thinking they want to get out as close to 13,000 as possible. Stay within this area. Stay within the weeklies. Okay? So you got out 10 minutes ago up here. To me, I can't fathom why. Now, I guess your stop is up here because of a breakout. I would like you to be better at anticipating that the area that we are, see this? Support, 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 support. You know, why would this not be support now? Okay? Especially after the double bottom kind of stuff. I'd rather you be out at, I don't know, $8 or $9, $10 ago. Okay? Okay, Muko? I think you held on a very long time instead of making the tough decision. Now, we had a conversation about this at Forex.Today a Monday or Tuesday with somebody, and it was a pretty direct conversation that we had where I'm like, look, you need to play the laws of averages. When you're at obvious support and on top of that, you have a pivot profit zone where you know the shorter guys are going to want to get out too. You're better off, instead of hoping like, I hope it falls further. On the long run, you're better just taking the profit down here, even at 1304, right? And if it does continue and breaks down here, what you'll find is it will come back, and then you'll short the second trade, right? The second opportunity. But that's quite rare, especially near such obvious support, right? So I'd rather you just be out, let's say, closer to 10 than, you got out at 15. I'd rather you get out at 10. Okay. Oh, wait, you what did you just do? Oh, you longed it. Oh, sorry, you longed it. Okay, so you bought it at 6. Okay. Okay, so here's the thing on that. If I was buying it at support, okay, especially this support here that I highlighted months ago, right? My target would be up here. So I'd be going for 50. Sorry about that. I misunderstood doing something, right? So you made 10 bucks. Yeah, I'd be more interested in 40 bucks. But your argument could be you don't know what's happening tomorrow in non-farm payrolls and all that kind of stuff. But if I'm buying it at long-term support, I should theoretically have the confidence to go to long-term resistance, right? Also, you could argue on a longer term point of view, you could argue that that's an M2 buy. Okay, I know M2 is more like 11 and you bought it at 6, but on the bigger time frame, that's part of the wiggle room, right? So you could argue, even if you're wrong, you could still argue that essentially you bought an M2, so your target should be M4. So again, that's going to take you to 1367, with your short-term conservative target being, more like 1350. Okay? Okay? Oh, Eternal Soul. Is that John? Are you John from conversations earlier in the week and the week before? Eternal Soul. But look, if you're trading shorter term, then you're just, yeah, sure, then you're fine. So let me try to put that together. Higher. So did you do this? 1306. Yeah, okay. So you bought a 618. So yeah, if you could take a 200%, sure. Right? Did you get out at the? Well, there's no pivot up there. How'd you declare that? Yeah, okay, yeah, sure, for sure, yeah. So you have to look at the more micro stuff on that. So you're looking at this area. I think I would have been even more interested in this area on that shorter term move. So yeah, you got to, yeah, okay, yeah. Sure, yeah, picked up some pips, right? If you want to email me, it's wayne@fxbootcamp.com. There's a good chance I won't respond. I sleep like 4 or 5 hours a day max. Yeah. So. Yeah, it's a short-term trade. It's just like my fear is that the trader doesn't continue to build upon it. Okay, because again, I think if we can turn the macro scenario around and the dollar weakens again, that this could be actually going up for the rest of the year. So it really depends on what you're looking at. Yeah, it's certainly well played. A 618 to a 200 is great. Nice, right? Taking a look at oil. Okay, I still have my support down in here. Support. The target for bears, there's a clear sell there. Basically Monday or Friday, I guess it was Friday last week, there was a clear sell. And the target, which is hard to fathom right now, the target is 61. Okay. So if you're a bear, you're putting that together. Now, I don't mind that play going into sort of peak oil and stuff, but once again, my bias, so I filter everything through my bias. My bias is I prefer to see oil going up on improving macroeconomic conditions. Okay? But peak oil happens June 1st in my analysis. Okay. So for oil to kind of move sideways and weaken a little bit during May is fine. But by the time June and July come to pass, we'll start to hear from the EIA and the IEA and OPEC and all these different things. News is going to start to trickle out that will increase the value of oil. So I'm already thinking about that. So will that kind of stuff happen? Could it happen in May instead of June and July? Well, yeah, there isn't anybody stopping OPEC from driving oil prices up, right? My June 1st number is based on 50 years worth of analysis. It may not be accurate to the day, it's a 50-year average for peak inventories, all that kind of stuff. But if we start drawing them down in mid-May instead of early June, well, then this goes up, right? So I would rather stay a bull and anticipate improving macroeconomic conditions, and then just find my prices. Like, I'd like to buy it at 65. And I said that a few days ago. But the bottom line is, if you're a bear, you definitely had a fantastic trade about a week ago. And based on that entry, if you're a bear, the bottom of May is supposed to be 61. If you took that, okay? So imagine you're thinking that way with gold, and somebody says, well, I picked up, 50 pips. And you're like, 50 pips? I mean, no, let's talk about it as if it was a currency, right? I'd say, well, great, you picked up 50 pips, but there's a 500 pip move that you're in, right? So that's the difference between a shorter term and a longer term trade. Now for oil, if you did want to trade it, I think what I would do is the up, the down, up sell scenario, and swing it down on a weekly basis. But this monthly move is pretty obvious. Okay. The basic swing on this, the basic weekly swing, is sell it at before, let's say, between 68 and 68.50, and the projected low for our week now is supposed to be down in here between 66 and 66.50. So that's what you should be doing for the week. If you are a bear, that's what your weekly trade plan would be. If you're a bear and you have a monthly trade plan, this is what your monthly trade plan would be. So you can see there are bears involved, right? There are long-term bears that are thinking for the whole month of May. There are shorter-term bears that are thinking the whole first week of May. But there could also be bulls here, right? So that begs the question, where are the bulls? And like I said, well, I'd like to buy it at 65. But, 66.50 might be fine. I might take a shot at 66.50, or I might let it sort of bounce in reverse at 66.50 and pick it up at 67 next week. But if it drops down to 65, I'll probably just take a shot. Shot through the heart. You're so lame, darling. You give rock a bad name. Bad name. Yeah. Okay. Is this too deep? Do you just want me to move faster? You're like, Wayne, I don't give a crap about all of that gobbledygook. Just tell me, should I buy it? Should I sell it? Where's the trade, eh? See oil in the range? Yeah, well then you wait. Now check this out. We knew the first week of May, in particular between Wednesday and Friday, we expect USD Mexican peso to fall. Can I get some more likes? There's like 107 people now. Just give me some feedback. Does that mean like 40 people think it sucks? I hope not. No, look, Eternal Soul says, so are you basing your opinion on oil going down? Whoa, 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 whoa. I'm not predicting oil going down. I'm telling you, bears are absolutely in the market. They are absolutely selling at very, very logical, predictable places. If I was a bear, I would have sold at those exact places too. So now I know for a fact there are bears. It's just factual. Is it my opinion oil's going down? I didn't say that. I said I would buy it at 65. I said I believe in global macroeconomics. I said I want the dollar to weaken. The thing is, we're not in that scenario right now. So my opinion is it goes up, just not at those prices. Right? So I'm not going to convince you one way or another on bias, but I can tell you who's playing the market, and there are bears in that market, and they have great trades. Those are great trades for the weekly swing. Those are great trades for the monthly swing, right? And if you don't know how to swing trade, you're missing something massively, hugely, enormously important. So maybe go to FX Bootcamp, take the swing trading course, right? Might be the best $1,000 you ever spent. Fix you up real good. But you know, that's just, there's just properness going on there. So anyways, going into this trade, this is a fundamental trade. So between Wednesday and Friday is typically when this move puts itself together. I would have liked it at different prices and at different pivots and stuff. But isn't it interesting that with all in the world that's going on, we get that on Wednesday. Yeah, 119.20, not 119, sorry, 1922, right? Or 1920. All right, 1920, not 1922, not 1925, not 1928, not 1915, not 1917, actually 1919 and a half. Let's just call it 1920. Okay. Look. I mean, it's amazing, right? I have this little color on my chart. Nice little color. It was drawn when we were down here. And it said, if USD Mexican peso heads up to that price, it should stop. We're also thinking somewhere between Wednesday and Friday would be a nice place to start shorting this. How many people, right? How many people have heard me say that I want to buy this pair? How many, right? How many times have you heard me say, well, maybe this month I'll buy USD Mexican peso? Never. So you know, within a 72-hour window, I would like to sell this pair. What we don't really know is the exact price until we kind of get to that window, and then we start looking at prices. And it's just amazing, and I'm always amazed, right? But it's just amazing that in that, right at the beginning of that window, boom, we hit obvious resistance and it holds. Look how remarkable this is. It didn't go a pip above that one either. Okay. Now, I mentioned swing trading. Oh, I got a thumbs down. So I apologize if this sucks. Anyways, a typical swing move here is that if you're a bull on a monthly basis, this is a buy. So you have to put all of this together. If you do sell this, it's likely to be short term, and it'll continue to rise until it reverses. It just hasn't reversed, right? So there's a lot going on in here. It's very interesting. I think this one's dangerous because I'd rather be selling in a downtrend. It doesn't really look like a downtrend right now. Do you see how obvious that swing is? It's just I'm not a bull on this one. Right? Like I said, generally my bias is weak US dollar with improving global macroeconomics. So I don't really want to buy the dollar. I certainly don't want to buy the peso. So the only thing I have going on here is the repatriation trade, and that only happens in that 72-hour window. So you can take a shot, drop a stop, and walk away. But on the bigger move, like for these swing traders, because that must have been just a beautiful trade last month, and they took profit at exactly the price they should. I mean, to the pip, guys. Think about that. That's not a random walk. Whoever bought this last month's swing trade got out to the exact pip, and what did they do? They bought it at the exact right price this month in May, and then on the weekly basis took their profit. The repatriation trade maybe shapes up. I don't like this one. I don't think I would take this one, but anyways, you have the opportunity. And what appears to me, gee whiz, what appears to me is whoever bought it down here and took profit there and then bought it back here, they're hell bent on getting this up into this zone. They're hell bent to getting it between let's say 1950. That's their minimal expectation, is what I think. Okay. By the way, I do these webinars every day at Forex.Today. They're totally free. Okay. Swing on by, you can participate in those ones as well. You just need to register. We don't send out advertisements. We don't rent our email lists to people. There's not even banner ads on the website. There's nothing for sale. There's no revenue based on anything. It's just a cool community, right? Think of it, free and no advertising. No harm, right? Euro Turkish lira in a very dangerous spot. All right, what is our time? We got to wrap it up. I've been asked 5 times to look at Euro Kiwi. Okay. So I might as well do that. Euro Kiwi, huh? Sure. Euro. I don't know if I've ever looked at a Euro Kiwi. I'm sure I would if I was Kiwi. Euro Kiwi. All right. Okay. Euro Kiwi, Kiwi. Let's add some proper indicators. So again, I don't know if you can hear banging and saws and all that kind of stuff. I've had a construction crew at my home now for 2 months. Oh, because I get dislikes because I come across arrogant. What they probably don't know is most of the people here I'm quite familiar with, and we hang out every single day. So we're quite familiar with each other, so maybe I don't come across as polished as I should be, but I'm not really pitching you anything. So, All right, so Euro Kiwi. We're in a swing short zone set off by a top created last month. Okay. Okay. So we're down here now into support. The 50% predicts 1382, which gets us to the central, and this is a tricky zone here. Okay. So this whole gray area is where bulls are going to live. Okay. So if you sold up here, you might want to take some profit. The longer term goal for someone selling this is to take it here. What is that? I can't read that. Is that 66? Looks like 66. So whoever is shorting it here at 72.5 or the retracement to 71.5, whoever's selling this area is looking at, again, I can't quite see that. I can't even see it. What is that? Can't get it at 66. Whiz, I'm getting old, huh? Right? So that's what they're thinking. Okay? Doesn't mean it'll happen, but that's what they're thinking. Bulls now are going to want to get involved pretty soon. The first bullish entry on the long term is going to be that monthly central pivot, which we're kicking off now. The next one is going to be further down, where is it? Is that it? No, that's S1. Where's the other one? Must be right here. Yeah. So this whole gray area between 69 and 70 is a buy zone for bulls. So let me mark this, okay? So if you're a bull now, I've already shown you the bear side. If you're a bull, you want to buy something in here. So let's say a 1, 2, 3 type scenario. Okay. Or you want to do the same down in here. Okay. Like this. Let's just put this a little more macro. Okay. If you're a bull, you want to do something like this. Scenario A and scenario B. So as a bear, should you sell here? No, because you should anticipate there are bulls there. To me, it's obvious there are bulls there. I can't see them. I don't have like back office data where I can see positions on MT4 or something like that. I just know if I'm a bull, I would buy it there. In this one, you have a weekly and a monthly overlap. So NFP could drop all this down, hit this 69.17 area, and then it pops the other way. And I take that shot because now I know the bears are supposed to take profit here. The short-term bears, whoever sold it here, might be hanging on. Well, post NFP, they have to get out there, right? A professional would have to get out there because that's their job. And then in that case, I'm going to look to buy it here and rally it back up. Okay, so if you are a bear, you should probably take profit here or take some profit down here. It's your call. You're supposed to manage the risk. So even if you think it's going to drop a few hundred pips, it doesn't have to do it today. Okay. So bears selling here and here are going down here. And bulls are thinking about buying it here, and bulls are thinking about buying it there. So hopefully that's helpful. Please visit Forex.Today if you want to hang out next week. Tomorrow I'm at FXStreet.com for Trade Non-Farm Payrolls Live. I've been doing that every month now for 145 months. 145 months. It's more than 12 years I've been doing that particular How to Trade Forex webinar, which is probably 145 months is probably longer than your last Forex gurus even traded. So anyways, thank you for your time. Thank you for your questions. Please visit tradersway.com and open a demo account. Just give us an opportunity to earn your loyalty and respect. I do webinars like this every single day. I'd like you to become part of our Traders Way family. We're an ECN. We place your trades into the interbanking system. Isn't that nice? Remember when the Swiss National Bank lied to everyone? And lots of money, people lost money. Brokers went out of businesses. It's more than 12 years, human God. A lot of brokers got in trouble. Why were they in trouble? If they're entering the trades into the interbanking system, they have no risk, right? Why did those brokers get into trouble? Well, maybe they were not entering your trades into the interbanking system. Maybe they were trading against their clients. Oops! Well, during those situations, like the Swiss National Bank, I was working with Traders Way, and there was no problem whatsoever. Why? We don't trade against you. You pull the trigger. As an ECN, we put your trade into the market. That's, I think, the type of organization that you want to work with, especially one that invests into you up front by providing webinars like this for free. I actually care about you, so I love you. Peace on earth. May the pips be with you. May your profits be above average. Throw your diamonds in the sky. And I'll see you for Trade Non-Farm Payrolls number 145 at fxstreet.com. Or I'll see you at Forex.Today on Monday and Tuesday and Wednesday and Thursday and Friday of next week. Free webinars at Forex.Today. Rin, you send me emails and I responded to one. I don't know. Your question is like, how do I get back in? You log in. I don't understand. So maybe rephrase the question, Rin. The only thing I can think of is that you took the course more than a year ago. Then that's a whole different question. But then you need to let me know, Rin. Okay. Yeah. See you guys. Thank you again for attending this webinar and subscribing. And please, if you haven't yet, please do the thumbs up thing. It matters for YouTube. And I'd appreciate it. Take care, y'all. All y'all.